Welcome to another edition of Zacks Rank Buying. I am Brian Boland, and I'm the aggressive growth stock strategist. And I've got two more stocks for your aggressive growth radar screen. And this week, our focus is looking for a bargain. The inflation rate is so high, your income is down, or at least your real income against inflation. So people are looking for the best possible deals, and we've got two stocks that help people find just that. All right, let's go to our first one, and it is Groupon. You remember this stock from, 10 years ago, long time ago. GRPN is the ticker. It's a Zacks rank buy, strong buy. It's got an A for growth and a B for value. So it's, looking kind of good here. $530 market cap. The stock missed earnings most recently, bottomed out around 10, has started to come all the way back. And obviously with a Zacks rank number one, that means estimates are still looking good. This stock was a big high flyer early in its early days because people were using Groupon to get great deals. The founder of the company, one of the founders of the company, Eric Lefkowski, has got a new stock, a new company, TEM, is not being highlighted. It is not a rank one. TEM, Tempus AI. It's an AI company in the medical field. So this guy's a mover and shaker. He's got a lot of companies, inner workings. He sold for several $100 million. He's got this one. He's got a few others. He's got a whole accelerator company. So that's just a company that's looking for small entrepreneurs that are building something big. So Eric Lefkowski, big internet guru, tycoon, if you will. All right, so he back to Groupon, Chicago-based firm, left for dead on the side of the road for a long time, but coming back. Let's take a look at the numbers we always look at in a stock like this. Are you beating the number? 25%. Here's a huge beat where they expected a loss right there, but posted big earnings. And back to back on that. So expecting losses and posting earnings, and then slipping back to a loss here, and not too great of a look there. But what are you going to do? This is a cyclical business, and we can see that most of these things, it's going to be positive at the end of the year when promotions are running high for retailers. All right, so now we're going to take a look at the movement in estimates. We go from, big movement, 12 to 20 cents, and then back down to 14 cents, but that's still up in a 60-day window. 27 cents to 38 and coming back down to 32, still up in that window. 30 cents to 47 cents for this year, and next year your earnings growth accelerates. I'm going to draw that line way up here. 33 cents up to 93 cents. That's a big time move. Things have changed here at Groupon. How is the top line doing? $514 million, and we just saw their market cap is right around that, so we know our price to sales is right around 1. It's going to be flat this year, but next year we're going to see 7% growth. So we got that growth acceleration, 514 to 551 on the top line. All right, let's take a look at our valuation. You're paying 28 times earnings, which is a decent amount considering you've got flat growth this year. Price to book is moderately high at 13 times. Probably an asset slim business if you think about it, because they're just reselling other people's goods or helping them sell their goods, and they're taking a fee. So 1% on sales, as we talked about. So here's the story here. Margins have ticked much higher, going from negative 5% to 1% to just about break even. And then we saw next year that earnings growth is big. So we're looking at margins really accelerating. Let's take a look at this chart. All right, here's the pandemic. We're all going to die, and we're not. We're coming back. It's the tech wreck of 22. This stock is left for dead under 10, but beating the number and slowly coming back, and earnings estimates are starting to tail up. Does that mean this stock goes to, this $30 level? Well, maybe, maybe not. Maybe that $18 range would be a good target zone for Groupon. And at $5 here, $5 on 13, you're looking at a nice return. All right, that's Groupon. Let's move to our next one. It's CarGurus. Now, a lot of people are shopping for cars, and used cars got super expensive a while back. CarGurus, put the name up here. CARG is the ticker. The Zacks rank #1 strong buy. A for growth, D for value. Just what I like to see. Strong growth style score, weak value style score tells me I'm in the right path here. We can see here's a earnings event right there, and then boom goes the dynamite, as someone once said. Stock goes way up there, $2 billion, almost $3 billion market cap. So let's go take a look at our numbers for CarGurus. It helps people find what are the best values for their used cars or shopping for new. Okay, are you beating the number? There was a meet, but for the most part, they're beating, and they're beating somewhat handily. Good to see. What about these estimates, Brian? What are they doing? Well, they're going from 37 cents to 43 cents. They're going from 42 cents to 47 cents. The full year going from $1.45 to $1.62. Next year going from $1.75 to $1.88. Love to see it. Love to see everyone win. Except for the University of Michigan. I'm not a big fan. I'm a Buckeye. All right, $882 million on the top line. Slight contraction this year, but again, acceleration into next year. Almost up to $1 billion in sales, 8%. So that's good revenue acceleration. Want to see that. All right, and look at this. We got a 17 times forward earnings multiple. I mean, I know we good contraction last year, the last quarter. Are we troughing out? And I think that's kind of why the stock bolted higher. 6 times price to book. I like that. 3 times price to sales. And here's your margin story. 5.78 to 6.38 to 7.42. Those numbers all look good. Take a look at our chart. What have we been doing? Pandemic is here. We're all going to die. But no, used car prices are going out of control. And then tech wreck of 22, and then slow rebound here. But here's what we got to point out here. These spaces in between these lines here suggest big time earnings growth. I like everything that I see here in CarGurus. It is definitely worth a deeper look and adding that stock to your aggressive growth radar screen. All right, that's it for this week. Be sure to join me next week when I take a look at 2 more stocks for your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to check out our latest promotion.